Hello, in this presentation we will set up new accounts within our chart of accounts within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. If you're following along with us, that's great. If not, that's okay. We will be going over how to enter new accounts into the chart of accounts. In order to do this, we're going to go over to the left-hand side where we see the accounting on the left-hand side. So we're going to go to the accounting tab, and that typically will open to the chart of accounts. There's two tabs up top, chart of accounts and reconcile. Here we have our chart of accounts. We can sort these chart of accounts in a few different ways. Note that the default typically will be by type, and that's going to be the best way generally to look at it because that's going to be the way that the trial balance will be in ordered by, and in general will be how the financial statements, the balance sheet and income statement or profit and loss will be ordered by, meaning we typically see it in order of assets, then liabilities, then equity, then income and expense type accounts. Within that subcategories, we have the asset of accounts receivable being a particular account for QuickBooks so that we can track things like the customer balances. Other current assets, we have the current asset sections, and then we have the accounts payable, which is a liability. It's in its own liability section. Within, if we had some other type of liabilities, which we will in the future, we would have current liabilities and then long-term liabilities. And then equity, which includes this opening balance that we're going to have to do something with at some point. We're going to have to close that balance out. And investments, owner investments, and retained earnings. And then we typically have the revenue accounts, the income statement accounts, revenue, then expenses, income, and then the expense of cost of goods sold related to us selling inventory, and then all other expenses. Note that because we don't have account numbers, within the categories, such as within the expense categories, we typically would have the ordering of alphabetical order within that category. If we wanted to order in some other way, which could be very useful because alphabetical order would not be necessarily the order of importance or the most logical order, then we could add account numbers. The reason we are not doing so in this problem is because it's very easy if we don't understand account numbers to apply them in a way that doesn't really make sense. So if we're going to apply account numbers, we want to make sure that we are applying those in such a way that we could still order the accounts by account type, and then the account numbers will work along ordering first by account type and then by account number, meaning we will order within each account type in a particular order. We could, however, adjust the order by name here, or by any other of these items here and adjust the order, mainly name and type. So it could be useful to go through those items. Note we also of course have the filter item here which will allow us to search for certain items within the chart of accounts. The first account we're going to add is a checking account. We don't have a checking account here, so that's going to be our cash account. So we're going to do that, we're going to go to new up top and select the new item in green. And we will have the categories here. The default here is the bank account. So we have the bank account and that's the one we want. As we go through some more accounts, we can pick some of these other items. Note it's in order, in essence, by assets, then liabilities and equity, income and expense type accounts, balance sheet accounts, then income statement accounts, then further subcategories into things like current assets, current liabilities, long-term assets, long-term liabilities. We're going to label this account with a detail type. We're going to say this will be our checking account. So we're going to have this detail of the checking account. And the account name, we're going to just leave it as checking. We might want to personalize it. You might want to personalize it to something like Wells Fargo or something like that. And possibly even put the last four digits of a number, of the bank number in order to, if you have multiple accounts, in order to differentiate those accounts. We will also enter the beginning balances here. So we're going to say that before we started this company, we had $25,000 before we started putting this information into the QuickBooks system. We're going to start this company and start putting in more data as of January 1st, 2021. And therefore we want to put this in as the last year, as of the last day of the last year. 12/31/20. So December 31st, 2020. Therefore, QuickBooks will do whatever it needs to do. It's going to debit cash and it's going to credit something, probably opening balance equity, in order to roll this over. If it does anything to temporary accounts, then it will be all set and all rolled over correct when we start the year we will be actually inputting data for, which will be 2021. So I'm going to say save and close. We now have the checking account set up. We're also going to include a credit card account. We're going to have a Visa account that we will set up. So that's going to be a liability type account. It's going to be down here once we order our operations. So we'll go through these similar browsers. We're going to go up top and say we want a new account. And this time we're going to say that it will be a credit card account. So they actually have an account called credit card. So we're going to select that. And if we select the detail type, it's only got the credit card, so we will keep it there. We could keep it at credit card if we have multiple credit cards. We could change the name, as I'll do here, to Visa, the credit card. Description will keep the same. We're not going to subcategorize it. If we had multiple credit cards, we may want to have a category called credit card and then subcategorize the particular credit cards we have into that category. We're going to put the balance here. We're going to have the beginning balance, which will be 1,000. So we'll type in the 1,000 here. And we're going to type the date 1 day before the date that we're going to start entering information, which is 12/31/20, December 31st, 2020, meaning we're going to actually start entering data as of January 1st, 2021. So we're then going to say save and close. Then if we scroll down, we see the Visa account here, and we see that 1,000 there, and as we see that, it's going to increase this account, and it's going to have to put something else somewhere else, and probably to opening balance equity, which we will have to take a look at and adjust for at the end of, not this presentation, but we'll take a look at that in the future. We're not going to put a loan payable. We have a loan payable on the books, which will be another liability type account, so it'll be down here. So we will go to new once again, and we're going to add the loan, and we're going to call this, it could be short-term or long-term. We're going to put it for this purposes into long-term liabilities, because the assumption is that it's going to be due over a year. So short-term would be something that we're going to pay within a year, long-term over a year, long-term liabilities. Then we got the subcategory of notes payable or other long-term liabilities. We'll keep it into notes payable for the subcategory. I'm going to actually call it loan payable. So for the name, we'll type in loan payable. Description, we will have no description here. We're going to say it's not a subcategory of anything else. And we will have a balance. That balance being 22,000. And that's going to be as of the last day of the year before the year we're going to start entering data, which is 12/31/20. So December 31st, 2020, we will start entering data January 1st, 2021. So we will save and close this item. So if we scroll down, we see our loan payable, the 22,000. Once again, that's a liability. QuickBooks must be doing something somewhere else. We didn't put a journal entry in. There's got to be 2 accounts affected by that 22. Probably went into opening balance equity. We'll take a look at that at the end of this. Then we're going to add another account, and that's going to be for furniture and fixture that we currently have. So we're going to say new account, and we're going to add furniture and fixture. That's going to be a fixed asset type of account, something that is depreciable. So fixed asset. And we're going to say it's not going to be accumulated depreciation. We can go through these building, furniture and fixture. So furniture and fixture is something that we will depreciate over time. And the name we're going to keep as furniture and fixture, no description. Subcategory none, we're going to keep that as is what it is. We will have an opening balance, however. So we will add this. It's going to be 75,000. And as of date, once again, 12/31/20, December 31st, 2020. We will be depreciating this item, so we will be tracking the depreciation. We're going to say track the depreciation. We get a message saying that QuickBooks is going to have 2 accounts for the asset, an account to track the cost, an account to track the depreciation. We have no depreciation at this point, so we're not going to put any beginning balance as of this time. So if we scroll down, we see the furniture and fixture, the 75,000, and that's really the net. We see the subcategories then, the original cost 75,000 net of the depreciation, which is really accumulated depreciation, and there is none there. And that's why the book value is the 75,000. Now that we have some new accounts in there and we've adjusted our beginning balances to have a more complete set of books, then we're going to go to the reports and see what we have in terms of reports at this time. Note that if you're starting from scratch, you may not have these beginning balances, but this is one way if you do have some beginning balances. QuickBooks makes it nice and easy to put in those beginning balances even if we're not doing a journal entry that necessarily balances out. Because if we put in all the balance sheet accounts, assets, and liabilities, QuickBooks will just basically force the other side to be going to the equity section, and then we'll just need to clean up whatever QuickBooks does in that equity section. Let's take a look at that now. So we're going to go to Reports here on the left-hand side. We're going to go to Reports, and then within the reports, we want to find the trial balance. First, we're going to look for a trial balance. So I'm going to say the trial balance. Here's the trial balance. And this is going to be more of an accountant type report. We will look at the balance sheet and the income statement, but the trial balance really gives us everything on one set, meaning it gives us all accounts, meaning it gives us the chart of accounts and the balances within them. We will have to deal with debits and credits a bit, but that's okay. We'll then look at the balance sheet and the income statement or profit and loss after that. So we're going to have the dates to be 12/31/21 to 12/31/21. So this actually 12/31/20 to 12/31/20. This is the date that we put stuff in there as of December 31st, 2020. The day before, we're actually going to be starting to enter the actual data for the current time period we will be working with. We're going to run that report. And here is our trial balance. A few important things to note on the trial balance. One is that it gives us all the chart of accounts. Now it doesn't give us all the accounts that, including accounts that have zero balances. So the chart of accounts was longer because it has more accounts that are currently not in use or have zero balances. But it does give us all the accounts that do have an account in it, an amount in it. And it shows it's the amount that's in there. We do have to deal with the debits and credits. And it also gives us the ordering of the accounts that will typically be the ordering, meaning the balance sheet accounts first and then the income statement accounts, or the assets and the balance sheet account, checking's an asset, accounts receivables an asset, inventory is an asset, furniture and fixtures an asset, and then the liabilities, accounts payable, the Visa credit card, the loan payable, and then the equity, which we have opening balance equity. Funny account, may never have heard of that before. It's not something we typically should see or have, and that's what we're going to have to get rid of. And then we've got the sales and other miscellaneous income. And throughout this whole process, we've never done any invoicing or any sales receipts or recorded any expenses. So how did these two get here? In the process of us setting up our checking account and our accounts receivable and our payable, typically our receivable and payable. When we set these up, see here's the other side of that entry here. That's what's giving us these amounts in the income statement. We don't want those amounts because we don't really know when the money was earned. We just know that people owed us $20,500, and therefore we want to make the balance sheet correct. It will be correct as of the first day that we start doing the actual data input, meaning if we look at this one day later than this, these two will go away and close out to the opening balance equity. So if we don't understand that, that's okay, but that's the point of us entering this information before the date that we actually start entering data. So we're going to then highlight this, and I'm going to make this one day later, first day of the current year that we will be working on. One day later, and we'll run that report, and we have the same information, except now the retained earnings is the only number here. We'd have no income and expense accounts. That's what we want. We want it rolled into retained earnings. And then this opening balance equity, that's the other account QuickBooks makes up in order to make this work. That's the other account that we're going to have to fix in order to really be correct. We shouldn't really have opening balance equity. If you do, it's okay because your bookkeeper or your CPA firm at the end of the year, taxes will probably know what that means. but we should clean that out and put it somewhere else, in this case to retained earnings. We won't get into the debits and credits too much here, but just note that the balance sheet account, we have the assets or debit balances, we got the liabilities are going to be the credit balance, the loans are credit, and then the equities are going to be credit. Revenue would be a credit, and debits to expenses. We're going to do much of the problem going forward without trying to avoid debits and credits, which is kind of what QuickBooks is in a way designed for. There's some areas where debits and credits are either very difficult to avoid and or it's a lot easier to do some things with debits and credits and you just can't really avoid it. But we can use a lot of forms that we won't need these. But in any case, the trial balance is one form that when we look at it, we use, of course, the debits and credits. We're going to go ahead and export this report now. So we're going to select this item here and export this report to Excel. We will enable the editing. So here it is. And then there's our report. We're just going to go ahead and save that to where we would like to have it. And we're going to go to File and Save As, then to Browse. I'm going to put mine into this Excel docs for the 6 here. And I'm just going to change the name a bit. I'm going to put Section 6 before this item. And then we'll have it here. And we could adjust this down. We probably don't need the Get Great Guitars. We could just have the trial balance here. But I'll keep that as is for now. We will save that. And that is our trial balance and the accounts that we have and our beginning balances. Shortly, we will be dealing with this one here, seeing if we can do something to get rid of that opening balance equity account, that account that QuickBooks puts in place as part of the setup process, which is nice, makes things easy, but which we really should adjust for.